Joining us now is Taylor Wright, co-head of investment banking at Barclays. Thanks for coming in. You're right here with us.
Thanks for having me. Happy New Year to both of you.
Happy New Year. So is the deal environment now, after a big year overall for equities last year, just sort of more free-flowing?
Yeah, look, I think last year was an interesting year for deals generally, right? Effectively, we've gone from an investment banking business standpoint almost perversely the best of times, which was 2021 in the midst of COVID, where the investment banking wallet was $133 billion, to 14-year low in activity last year, $66 billion by our numbers. And so, we do expect an improvement on 2023 and going into 2024. You started to see it in the fourth quarter. You had $1 billion or $1 trillion rather of announced M&A activity in the fourth quarter against $3.1 trillion for the full year. So that's a positive. And then you've started to see some elements of stability or consensus around economic conditions, rate outlooks, and things like that. In fact, listening to you guys in the last 10 minutes or so, it's interesting. Nobody's talking about, well, will the Fed hike anymore? They're just talking about how many cuts, right?
Yeah.
And so, our perspective has really been 3 cuts, and we've been a little bit lower as a consensus matter around earnings growth in the S&P 500. So it seems like it's coming around to that. But it's a more predictable environment where we think people can make decisions around M&A and investing, and we think that's a more conducive environment for activity.
But what about IPOs? I mean, so many of the late-stage private company founders that I'm talking to, at least in tech, are saying, not yet. And normally when you see the S&P at these kind of high levels, people are chomping at the bit to go.
Yeah, it's interesting. I mean, I was at a client meeting the other day, and I sort of said to them, well, if I told you S&P 500 closed a 52-week high, NASDAQ, same thing, Russell, same thing, strong rally into year-end, rates at 4% on the 10-year, and VIX in the low teens, you'd think there'd be a lot of activity. So all those things are quite conducive. I think the IPO market takes some time to start. So, if we look at the activity at the firm in terms of how people are spending their time, the bake-off activity was picking up in the fourth quarter. The restarting of processes that have perhaps been shelved because of market conditions or other factors have kind of restarted. So we do think IPO product's going to come. And when IPO markets open, usually what you need is it's an exercise in confidence building, right? So most of the time, investors will say, bring us a large-ish cap, liquid IPO with profitability, and that deal goes well, we'll participate. And so there's been a couple fits and starts around that last year. There were hopes around it at the beginning of the year. The ARM IPO was a hope for positive outcome, and it's been positive for investors, but didn't really restart the market. So, we think the market sets up well, and, we need a few deals to come to work, and we know investors are looking to invest.
So when we talk about exit strategies, whether it's in terms of M&A or acquisitions, or whether it's in terms of going public and the IPO pipeline, what are the types of companies, what are the types of industry sectors, the types of metrics that are going to matter most for those companies that see these types of strategies come to fruition this year?
Yeah, look, I think if you look at just large secular trends, right? We still think technology is always a big driver of the IPO market. Technology, we think, will still be there. Healthcare will be there. It's been kind of a very slow year for healthcare, but you've already seen some early deals this year. We think healthcare and life sciences could have a big year this year. Energy transition and the reindustrialization of the broader infrastructure economy, we think, is also a key theme. And you have a number of other factors that are driving those decisions around sponsor exits, sponsors needing to monetize and return capital to LPs. So I think those all set up very well. But again, I think people are going to look for the first deals. They're going to want them to work. They're going to want a company that is scale either in absolute terms or in the market or in a scale market that has predictable profitability or a predictable path to profitability.